Yeah, so our assets that we're chasing now are going to be a mix of what I'll call co-living and conventional multifamily apartments. What we have seen, and this is pretty evident at our property in Pittsburgh, is that when you get the right mix of a co-living concept and a conventional concept in the same building, you protect the building's upside and downside risk from an ownership perspective. You broaden your demographic that you're really marketing to, and you can kind of upsell or downsell people based on their life circumstances. And so I think that what we have seen, and where I actually think co-living will eventually go, is just my philosophical perspective, is that there'll be a unit type of co-living in most residential buildings. You'll have a floor or two that's co-living, or you'll have serviced apartments, mixed through the building. People can opt in, opt out of the concept. I think that's where this eventually goes, and you just offer different price points, along the way. And then you can market the asset to a much broader demographic. And I think that's really where we're pushing ahead. The whole idea of attainable housing or attainable luxury, or however you want to describe it. I think co-living can help solve a lot of the housing issues that we have, and also provide just a better product than the makeshift roommating that used to happen, or it still happens in our major urban cities. That's not going to go away post COVID. I think that's something that we constantly pound the pavement on that front from investors' perspective. So.
Christine here with another fun episode of the Coliving Code Show every single Wednesday. It's on YouTube, Spotify, SoundCloud, iTunes, and also the CEO of Kindred, which is a platform for the co-living industry. And as usual, I want to give a quick thank you to our sponsors that help support this show, starting with Anyplace. With the ever-growing demand for flexible living, it is more valuable than ever to find move-in ready housing that fits your needs without the burden of a long lease. Serviced apartments and alternative options like co-living make it super easy and painless to move, relocate, or simply explore a city. And we're honored to share with you the best platform to discover unique and affordable places to live in locations around the world. For an operator, definitely reach out to them if you want to get listed on their platform. And also thank you to ISL Furnishings, a brand created through Interspace Living, which exists in the exciting space where design meets function. Interspace parlayed its success in commercial grade unit furniture and conceived an elevated offering. They believe strongly in the co-living industry, and they already work with some of the larger companies like Quarters and Star City. They were founded with the mission to bring your brand to life. Their goal is to revolutionize the unit furniture experience. And driven by creativity, ISL Furnishings believes that interiors should inspire brilliance. Every venue has its own voice. They exist to clarify that voice, interpret your brand vision, and deliver superior quality on time, every time. Okay, so this week, you guys, we are bringing on Gregg. He is the CEO of Ollie. We did have Chris on, who was the original founder and CEO, and we had him back on in March of 2019. I know a lot of people have been requesting for Gregg. He just took over the helm earlier this year, so we get updates on Ollie and their exciting growth and what they've got going on. So I will read Gregg's bio, and then we'll launch right into this week's episode. Gregg oversees the management and oversight of Ollie, responsible for leading the execution of the company business plan. He leads the business development and growth objectives and ensuring Ollie's product, mission, and objectives are achieved. And prior to Ollie, he spent his career in private equity, real estate investments, and operating businesses. He's a board member and investor in Ollie and board member of the Artist Co-op, a non-for-profit in New York. So let's launch right into it. Great conversation with Gregg. I know you guys will love it. Okay, everybody. So this week, like I said, we're bringing on Gregg with Ollie. He's been requested a few times already. I know you just took the post in January. I would love for you to kind of catch us up on, you sat on the board first, then you took over the CEO president position back in January of this year, right, Gregg?
That's right. Yep, that's right.
Awesome. Well, welcome to the show.
Yeah, thanks for having me.
Yeah. Yeah, you're so welcome. Like I said, everybody was requesting you. So I'm like, I better get them on. We had, I know Ollie started back in 2016. Chris Bledsoe, the original founder, CEO, came on in March of 2019 onto the show. So we'll have that in the show notes if you guys want to watch Chris's episode from over a year ago. But yeah, Greg, just kind of catch us up to speed on when you came into the organization and what you're now doing.
Yeah, sure. Yeah, no, again, thanks for having me. Pleasure to be on. Pretty excited to share a little bit about Ollie and, kind of, move this industry along where I think it's, really has a lot of legs to it. Yeah, so I came in January of this year, and, the goal of 2020 really was to start scaling, the overall business. And with my background, it was kind of a good fit, I think, to really kind of take Ollie to the future. And so, there's obviously a lot of things that happen when you have, change of leadership kind of situation. But, overall, the business has, continued to grow. We've almost doubled our portfolio size over the last 6 months, despite COVID and all the challenges that has presented itself. And, we're really starting to move the business towards a better future. And, I think the growth story for Ollie really kind of, came from a perspective where, we approached it from an institutional level. Our very first asset was a 120 unit property, or a 55 unit property in Kids Bay. And then our second asset was 120 units in Pittsburgh. And the second one was, Alta, which is still the largest purpose-built co-living building in Long Island City. And so we've kind of graduated ourselves, through that learning curve. And so it's been good. It's been challenging. It's harder to scale, when you build the ground up development in large urban cores. It's 3 to 4 years to build an asset. But the business is good. I think the co-living industry has a lot of challenges and a lot of probably bad PR, but I think the data that we're seeing is actually pretty compelling. So.
Yeah, you guys were kind of the original OGs alongside of you guys launched kind of alongside of Common and the Collective. It's like those are the three names that always get mentioned when people talk about, when co-living actually launched.
Right. Yeah, no, it's always one of these things. I talk to my team about this quite a bit. And this just kind of shows, where the growth really can come from. We're at about 2,000 beds now under contract or LOI. Common, I think, is about 2,000 under management, a couple of thousand more under development. Collective obviously has a few assets too. And we're always considered like 1, 2, or 3. And, that in context of the larger multifamily space and the residential space is pretty small, right? And so the growth opportunity, I think, for all three, companies and others that are in the space as well, you have Star City that's out in California. You have a few others that are trying to test out different models. We're really on the verge here of, growing pretty quickly. And it's just, how do you grow smartly, I think is really kind of the biggest question we have.
And I know you've got that private equity background, you've got real estate investing background. Yeah. And so I would love to kind of get your thoughts on crossover. Like you just said, multifamily housing, there's kind of this, it seems to be like a little bit of a hybrid going on. That's a dated industry. I think that needed some help anyways. Yeah. So yeah, your thoughts on kind of co-living as a sector investment vehicle versus multifamily, or they kind of one in the same?
Yeah, sure. So I, it's kind of funny. My career actually started off in the senior housing space, and in the private equity senior housing space. And I spent about 10 years, in that industry. And when I left and had the opportunity to look at Ollie initially as the investor side and now on the management side, there was a lot of parallels between what senior housing went through in the late 2000s or early 2000s, late 90s, and where it is today to what co-living actually is, right? The senior housing space, as it's looked at now, is institutional. People want a piece of it. It's sought after. There's tons of money that's chasing deals there. Co-living space is getting close. I think we're getting really close to starting to have that buy-in that this is a class that's going to stick around. I think where we become, much bigger portion of the residential sector is like showing that we can be professional management and not just being, startup-y, techie like, but actually showing people that there's longevity to the product. There's not just a flash in the pan. There's actually people that want this, concept, and layering it into existing assets or building existing assets, I think is really going to show, the general investing world that there's more here than just, people sitting around singing Kumbaya. Like, I think that's the commune concept is still a little bit in the institutional investor's mind, but as we're as Ollie and Common and Collective are starting to do more outside of just co-living, it's starting to really kind of bring, I think, a little bit of a different eye to the sector.
And then what portion? So is it just strictly, because I know with Common, their pipeline's kind of 50-50 split, to be honest.
Right.
It's like 50 categorized as co-living, 50% categorized as like regular multifamily.
Mm-hmm.
Are you guys doing anything similar to that?
Yeah, so our assets that we're chasing now are going to be a mix of what I'll call co-living and conventional multifamily apartments. What we have seen, and this is pretty evident at our property in Pittsburgh, is that when you get the right mix of a co-living concept and a conventional concept in the same building, you protect the building's upside and downside risk from an ownership perspective. You broaden your demographic that you're really marketing to, and you can kind of upsell or downsell people based on their life circumstances. And so I think that what we have seen, and where I actually think co-living will eventually go, is just my philosophical perspective, is that there'll be a unit type of co-living in most residential buildings. You'll have a floor or two that's co-living, or you'll have serviced apartments mixed through the building. People can opt in, opt out of the concept. I think that's where this eventually goes, and you just offer different price points along the way, and then you can market the asset to a much broader demographic. And I think that's really where we're pushing ahead. The whole idea of attainable housing or attainable luxury, or however you want to describe it. I think co-living can help solve a lot of the housing issues that we have, and also provide just a better product than the makeshift roommating that used to happen, or it still happens in our major urban cities. That's not going to go away post COVID. I think that's something that we constantly pound the pavement on that front from investors' perspective. So.
No, that's great. And then, definitely we want to bring up the COVID, every episode now we're bringing up COVID. But real quick on right before that is, I love that idea of mixed use in the same building, because obviously sometimes people outgrow co-living. Maybe they get a partner, maybe they want to start a family, maybe they want their own private space. So that's kind of cool. They could stay within your portfolio, within the same building even, by starting on one level of co-living and then moving up. So yeah, I mean, definitely what's happened during COVID for Ollie.
It's been interesting. I think that, the multifamily, I'll just call it the multifamily sector, which is where we get categorized into, has, clearly industrial and multifamily from the investing world has seen the best returns and the best results. Industrial continues to do really well, and multifamily has done really well. I think in part, especially in the States, due to, some government support on, unemployment checks and eviction notices and those types of things. But, we've seen on our portfolio a pretty significant set of data that's come through from a collection standpoint. Our asset in Pittsburgh has been less than 2.5% delinquency, since COVID started. And it's really is like one or two residents, each month. And they were problem pre-COVID, and they continue to be kind of an issue post-COVID, which is something we're managing. And then our property in Long Island City was about 5 to 5.5% delinquency, which stayed right on track with what the rest of the luxury units were doing in that building. And so we've actually seen the ability to pay, which is obviously an issue that people really focus on, not really be as big of a concern as we thought it was going to be, heading into COVID. The gateway cities generally are struggling with occupancy, right? San Francisco, New York, Los Angeles is a little bit of a different story, but occupancy in those markets are struggling, just given people's hesitancy on getting back into the city. I think that as a real estate operator and an investor in the space, if you have a short-term view of the world, then you're going to be concerned. But we're not concerned as we kind of look out 2-3 years down the road, where I think this comes back pretty significantly. What we've seen is actually people really want community, and I think that's been a continued theme that we found throughout COVID, throughout this COVID period, is that people, they don't want to live alone. And I think that's kind of, a big tell from our perspective as to why co-living does make sense. People want to make sure that they're looked after, that they're not sitting in an apartment by themselves in New York City where they can't go out to the restaurant. How great would it be to have a roommate you cook a meal with and watch a movie with, right? Like, you could do that in the co-living space. Much tougher to do that, if you have your own apartment living in New York.
No, and that's, good. That kind of answers part of my next question was, with the eviction moratorium, which I know is not in every city, but, cities that you guys are in, if that scared any investors on. So it sounds like just the short-term thinking investors, maybe not the long-term ones.
Yeah, I think, the challenge for the co-living sector is going to be a couple of things post-COVID. We had the wind at our backs when it came to affordability and lack of housing. That was really kind of at our backs. What's going to be a challenge now going forward is densification, right? Are cities going to be okay with more people living in, less space? And, that's the whole math equation and formula behind why co-living makes sense from an investor standpoint. And if there's a challenge on that front, I think that we have to do a really good job of showing why and how we can be safe and why it makes sense to do co-living still, despite some of those, concerns that local authorities or constituencies might have. And so, I think the more we can put out into the market about why community matters, why people want to have roommates, how we're doing it in a safe and effective way. One of the things that Ollie really focused on in the beginning was how do we design and create a space that is not only code compliant, but also, landlord tenant compliant. And that has been something that we've always focused on, because the last thing you want to have for a niche market is to get a lot of heat from, local, communities and councils that are like, whoa, you guys are doing these things completely wrong. And now we're going to, press on you, and you're going to have to go change all of your docs and you have to go back to your residence. And so we've really tried to focus on doing it from a code compliant and LNT compliant perspective. It's harder. It takes a little bit longer to do, but, I think the more that we work with the local communities and with the residents and kind of make the package a comprehensive approach, I think that will really do well, not only for Ollie, but I think generally for the co-living sector. And so it's something that we've really kind of, put our focus and attention to.
And then with the current buildings, we'll talk about the future ones in a second. What did you guys have to close down your beautiful common area space and rec space, gym?
Yeah, no, it was a challenge, right? So the thesis behind Ollie's approach to co-living was we'll shrink the space that you live in, but we'll give it all back to you in community. And tenfold kind of concept. So when that community went away, we really had to quickly pivot ourselves towards, all right, how do we provide the same level of community just in a different manner? And so we built a pretty significant tech platform over the last 5 years or 4 years now, and our Ollie Living app is something that we've really kind of pushed and built out from a platform perspective. And we're able to really host almost all of our social activities and events on there. We started pushing out opting in, opting out concepts for, various services for our residents. And I think that kind of gave everybody a little bit of a breath of fresh air, because now all of a sudden they were like, okay, I don't have to leave my room to go get the same, level of service or community that I was getting before. It's not great. And I think everybody, generally just kind of buckled down and was like, all right, this is a short-term thing. I can't go to the gym, but I can get, virtual fitness in my apartment for now. And I'm fine doing that. One of the things I've really kind of pressed my team on is, if this continues for 6, 9, 12 months, what's our plan? Everybody initially was like, all right, this is a 90-day situation. Let's buckle down, batten down the hatches. We'll Band-Aid everything and kind of make it through. We're now talking here in August and gyms still aren't open in New York, right? And so how do we make this more of a medium long-term plan? And we started talking about that in May, once we kind of started to see that, this is not going to be something that quickly flips a switch and we're right back to normal. How do we either slowly roll out activities again and open up common spaces, or how do we make it more permanent in the term of, making it feel more like it's not a Band-Aid and it's actually something that we could continue to do. And I think what could come out of it, which could be really interesting for co-living and Ollie in particular, is that we could start applying this out into the general population as well, where people could access, the Ollie platform and utilize some of the services that we have, even if they're not in an Ollie building. And I think that's one of the pivots that we're really looking at, is how do we use our existing technology to broaden our marketplace out of the building, not only in the building.
I know. No, I have made a side note to make sure I talked about your guys' tech, especially me being with a tech background. Right. You guys probably have one of the best apps. I've seen it through. So congrats on that. I think Thanks. You guys nailed the tech, and I know how hard that is when you guys are developing properties and managing properties and your technology company all in one. And then you guys have the Ollie. You still have the Ollie social side of the platform
We
and
do.
provisions.
Yep.
Because you guys have some other little tiered
Yeah,
offerings, which is cool.
Yeah, we try to, think about the resident experience and the roommating experience. And this is something, that Chris and Andrew really, I think did a great job of when they initially thought of the concept was, where are all the friction points that happen, in a moving situation, a roommate situation, and then a living situation? And how do we use not only service in-person service, but also use technology to kind of help, reduce some of those friction points. And so our tech platform has really been catered to solving those issues. So finding a roommate, we created a website called Bed Better, which is a platform you go onto. You can find a roommate, you can select a room, you can put your personality and characteristics into it, and it tries to, form households so you can move in, without knowing that this is a stranger, but this person might be very similar to me. Do they get up late? Do they get up early? Do they like rock music? Do they like yoga? Like, you can understand a little bit more about them before you move in, which alleviates, a lot of investors are like, whoa, you have roommates living together and they're strangers. Do you ever get into fights? And it's like, not really, because, people have generally done an upfront workload on, all right, who's my roommate? And then the tech has helped them, understand who that person is. So that's been really crucial for us on the lease up side. And then we created the Ollie social concept, which is now it's a virtual based platform, but, was a way to create community through activities and engaging residents, which has been, when we do our surveys and, try to understand feedback from residents, it's always one or two top things that people really love about the Ollie product. And then in addition to that, we said, if you're moving from one city to another city, we need to have some way for you to be able to get household goods that you might not have taken with you. And so we created Ollie Provisions, which is a website that allows people to go on to. There's vendors on there that are preferred vendors. They get a good discount. Usually the initial movement package has a few items that came from those vendors. And so it kind of gives somebody the ability to move in without really having to worry about, where am I going to go get sheets, or where am I going to get a towel from, or, where am I going to try to figure out how do I get plates or whatever it is that you want to have. It's already provided for you. So I think it's been a good product. What we've started to really try to figure out is, what do people really value, in that product? I think initially we were like, let's do everything. And now let's try to test it a little bit. So now we're trying to figure out, like, if we lower the rent by $25 and we remove the plates, would that be a better price point for somebody? Or, if we added a couple more things and kept the price the same, would that be better? And so we're trying to, figure out what that elasticity is on the resident experience side, which I think, when we talk with residents and then we talk with investors, they always want to know, like, is it biweekly or is it weekly housekeeping? And how much more could you get, or how much less could you get? And it really, from the resident's perspective, and this is something we always try to, hammer home, is like, the all-inclusive price is really important. The more and more you try to nickel and dime and try to, put it all a cart or whatever it is, it just makes it more and more confusing, right? Like, people like to make choices, but they like to make limited choices. So make it a little easier for them and make it a deal. And if you can do that right, I think that's something that we've really pressed on with our technology and our service package.
Yeah. And did you guys need to discount rents at all when you guys shut down the gym, shut down the common areas, shut down the live events?
Mm-hmm. We did a couple of things. So we started to deliver, we have a housekeeping service that in pre-COVID and non-COVID times is a weekly tidy, which they come in, they sweep the floors. Some buildings, they make your bed and change your linens. Other buildings, they don't. We created a hospitality kit, which basically our team just turned to making cleaning kits and toilet paper kits. And basically we drop those off every single week. So that was something that we pivoted to. And then on the Ollie social side, rather than spending the funds on in-person events, we created virtual events. And we would do, I think right now we're doing 2 events a day. We do one in the morning and one in the evening. So we've actually increased the amount of engagement, right? And so because of those 2 pivots, we've seen residents be okay. And again, I say okay in this short-term, time period. If this is a 2-year thing, we're probably going to look at this a little differently. But in the short term, people have understood, like, all right, not everybody can do the same thing they were doing before. There's been, a handful of times where people have said, hey, is there a discount coming to me because I'm not getting the housekeeping, or I'm not going to happy hours anymore? Like, where is that money going? We've tried to talk them through, like, we've just taken those dollars and put them, differently. And so it's trying to make the same level of service, but just kind of delivered in a different way. There's our property in Pittsburgh, which I think has actually kind of been pretty neat. we've had some savings, we had savings, going through COVID on the housekeeping side, because it's just less interaction on labor. And we've actually taken those savings and asked the residents, what would you like to do with some of these dollars? And we kind of gave them a little bit of a choice. We did, we're going to do a grand reopening or post-COVID party or whatever it is when it's safe to, be around people again, donating to a local charity, and then also, providing a deep clean for their unit once we can provide housekeeping again. So we've kind of done this, bucketing thing, and people really liked, I think, that approach, at that asset in particular. So we've tried to customize a little bit to each situation. But yeah, I mean, it's been different. So on the discount side, the rental market, the pricing market on new move-ins, clearly is whatever is going on in that market right now. In New York, you're seeing anywhere from 1.5 to 2 months of rent that's being given away, across the city. We're no different than that. In Pittsburgh, we've actually been able to maintain pricing pretty well. We've had to do a little concession, but not anything crazy.
In Pittsburgh, are you guys by Carnegie Mellon?
We are, yeah. So we're located right in Shady Side in Pittsburgh. So we're kind of uniquely positioned between Pitt and CMU, and then Google and Uber are kind of right around the corner from us. So that property is kind of an interesting test case, because we sprinkled co-living throughout the building. So each floor has some co-living in it, and each floor has some luxury units in it. And so you don't really know if you're living next to a co-living unit or if you're living next to a luxury unit. And it performs well. It's our best performing asset, and it's something that I kind of use as a prototype for how we want to do co-living in the future.
Oh, that's cool. And then the universities, however, because I know some of those university towns are getting hit really hard because the schools went online.
Yeah.
Did you guys have decrease of occupancy at that property?
Yeah. What was interesting, and this is something I think that we're trying to figure out what's going on, but it's a little bit of a tale of two cities, where the gateway markets that were very focused on international growth, I think, have seen the hardest hit in occupancy. So New York, for instance, and San Francisco. Pittsburgh, we saw actually an initial increase in occupancy. So when all the universities closed down their campuses, we saw about a 5% pickup in occupancy at that property, because not every student has mom and dad to go home to. Shocking, but some people have hey, I need to stay in the city because I have a job, or I need to stay in the city because I don't have a place to go home to. And so I think the co-living product in that instance worked really well, because people were able to move in very quickly, and were able to access a good living situation. So that was good. And then what we've seen over time is, with the universities kind of saying, we might reopen, we might not, we might not. I think it's given some of the university towns a harder time to really forecast what's going to happen. So we've been up through June, we were 92% plus leased. Today we're about 86% leased at that property. So we've seen a little bit of a decrease. That's really been due to people touring, wanting to move in, and then kind of seeing what's going on, in the university market. And so I think it would be great, and if anybody in Pittsburgh is listening, it'd be great to know, what's the plan, right? And I think that everyone's still trying to make this, live. And of course, it's an ever-changing situation, so it's tough to forecast, but we're trying to understand what's going on there.
No, that makes sense. And then, so you guys, last time I talked to Chris, you guys were only on the East Coast when I interviewed him. And then you guys expanded West Coast. Where are some upcoming cities that you guys are working on?
Yeah, sure. So we launched in California this year, which we're really excited about. It's been a market that we've been chasing for a few years now, and really trying to find the right entry point into that marketplace. And so we were able to partner with two great companies, Avo and Six Peak in Los Angeles, and we have two assets opening in the Hollywood and Koreatown markets this fall. So really excited about those two assets. And what we've seen, in Los Angeles, which is different than some of the other gateway markets, and I think it's just because Los Angeles is less dense, is occupancy is okay. Los Angeles is not doing poorly; it's actually doing fairly well, not only in the for sale market, but also in the for rent market. And so we're pretty excited about growing in Los Angeles. We have another partnership that we're working on in LA now. We have two assets that we're chasing on a development side, looking at buying an existing property and making it Ollie in LA. And so we're really trying to push, I think, in markets where co-living has already been proven as a concept, which LA has, a handful of different operators that have done a great job there already. So there's already the acceptance of co-living. And now how can we bring a different, just different perspective on co-living of Ollie, right? And so that's something we're pretty excited about. And then we have another project that we're working on in the Bay Area, that with a pretty institutional partner that we're excited to announce here, later this year. And, we're looking to grow, West Coast, East Coast. I do think that co-living is going to be, a market specific thing. I think each market is going to be a little different. A 300 square foot studio in New York is probably a 450 square foot studio in Dallas or Atlanta, but they could probably both, accept co-living. And so I think that we have to think about what each market really wants from the consumer's perspective, and then cater how co-living can help, diversify and add some arbitrage to those properties. So.
Yeah, and it's funny. I'm here in San Diego. I'm in LA a lot, and I haven't seen your Los Angeles property yet. So shame on me. I need to go up there. And then Jacob Shapiro,
like 2 weeks away from C of O, so we're getting there. So.
Oh, good. And then Jacob Shapiro, he was on the show a couple of weeks ago.
Good.
And I always ask, like, what are your favorite concepts that are out there? And I'm going to ask you that too soon. But and he named Ollie, and he went to the Alta property, and he just said your guys' common space in the gym like blew his mind. It was incredible. So yeah, you guys got some credit on the show recently for Ollie, which is nice. So I would love to hear are there some concepts, some things that are going on in the co-living space, community living space, anywhere in the world that you also think are doing, just a good job?
Yeah, no, I think that what I think co-living is going to do, and this is, I think a little bit of the disruptor concept, which I really think that's what co-living can become, is the old school, and you and I, chat about this before the show, the old school way of property management, talking about landlord-tenant relationships, I think is really going to move towards manager-resident relationships. And rather than seeing everybody once a year when it comes time to sign your lease and get that rent increase, which you're going to argue about anyways, why not, have 12 interactions with that person, over the course of the time. And then when that rent increase comes up or doesn't come up, it's just a no brainer. Right. And so I think that, the concept that I really like are moving towards this property management 2.0, which I think is, really where Ollie and some of the others can make some headway. And, I think Common's, announcement with some of the Nuveen assets just shows that up and coming property managers that have, got their lessons learned in co-living are now applying it, towards institutional quality product is great. We started with institutional quality product, and now we're, trying to figure out other ways to manage assets, in a more efficient manner. And so I think that's good. The Star City guys are trying to, create a in-house development team and really make that the way to go forward. No one has done that in our space in the U.S. I think X Social started there, and then there was the separation, a little bit ago. So I think those are some things I really like to see. And then there's going to be the niche stuff, which I think actually works really well. The Haven Group in LA, I think what they do from a health and wellness side of co-living, how they approach it, that works really well. I think that's kind of a cool thing that people can utilize. And so that's, I think we're going to find is, you have your Marriotts, your Hiltons, your Hyatts of the world, and we're going to be no different in the co-living space, where everybody's going to have kind of similar themes throughout each of the buildings, but everyone's going to kind of have their twist to it. And I think that's something that is good for us. Actually, I think we're going to be able to push, the institutional property management concepts and really kind of make them either change their ways, or they're going to, they're eventually going to go by the wayside. And then co-living operators are going to be the way of the world. It's kind of that's the future that I foresee. If you don't pivot, if you don't build the tech, if you don't start to think about landlord-tenant relationships in a different manner, people are going to be asking more out of their real estate. It's just generally what's happening all over the country. The co-working space clearly pushed that. Retail is clearly pushing that. People are no longer wanting to go to, big box retail. They want an experience when they go to retail. It's going to be no different in the residential space. COVID has kind of forced that a little bit, right? You've seen people just say, hey, like, how often do you clean my building? When has anybody ever walked into a building and said, when is the elevator cleaned, right? You walk in a co-living space, you're like, oh, you do weekly housekeeping? Immediately you're like, wow, they care about this building a little bit more than, just your regular property manager. So I think that's something that we can really utilize and kind of leverage into in the co-living space. And start applying it, towards property management 2.0. And I think that's kind of the wave of the future.
No, and that's amazing. And it's funny. I was in property management in the early 2000s. So
Okay.
it's like 20 years ago. It was the Irvine company here in California.
Sure. Yeah, sure.
So you're exactly right. You just see the resident, for maybe a maintenance request or 1 year lease renewal when they're going to up the rent and not provide that service that needs to be provided. So you're right. It's fun to see this property management 2.0 and with tech involved too, making it so much more friendly for the actual resident and the guests. And not as much landlord friendly. So that's always
well. I mean, so long you're not shrinking like the return profile, and I just think co-living enhances the return profile of assets. Then landlords and investors should be like, wow, this is really cool. This is something different, and my product is differentiated. And so long the capital markets don't look at this as a hospitality type of service. And I think that's something that we've really kind of tried to hammer home is we do typically 12-month leases with the same credit quality that a normal apartment has, and that's kind of given people the perspective like, oh, okay, wow, this should trade now at multifamily cap rates. And so that's something that we've tried to really push on from a company's perspective.
Because did you guys already do a refi on one of your buildings?
Let's see. The property in Long Island City, Alta, has been refinanced twice. So it's been recapped twice, and each time, and this has been, a blessing for us, and not really a blessing as a surprise, but just like we weren't, 100% sure what the capital markets were going to say about it. And the cap rates that were applied to the luxury, conventional apartments were the same cap rate that was applied to the Ollie apartments. And I think that's really due to the credit quality being the same. The risk profile is basically the same, right? If your lease is the same, it pays the same, the delinquency is the same, like why would it be any different? So that's something that we've tried to really, pay attention to when we look at new assets is how do we maintain not only the resident experience, because that's focus number one, but also right alongside that, make sure that the investor is, not losing any market presence because of the co-living concept, or what we call it.
Yeah, because there hasn't been like a liquidity event or exit in the co-living sector. So like the refi is like, we're getting there. I'm curious, did you guys use the word, was it just like multifamily that you used in the paperwork on the refis? Or did you was co-living brought up at all?
Yeah, co-living brought up. I mean, it's, when you, I don't know if you toured Alta or not yet, but the tours that we've done there, you wouldn't know if you're on an Ollie floor or if you were on a conventional floor. I mean, I can tell you that, the first 13 floors, 13 floors in that building are Ollie floors. But if you didn't know that, you wouldn't have any idea that these are co-living units versus conventional units. And we've tried to approach it from the perspective of it shouldn't be any different. We should just design it, furnish it, and put service into the unit, but not make it feel like, you're a second class person or it's a different product, in the building. It should just look the same and feel the same. And I think that's given investors and especially lenders, obviously lenders are a big piece of this, confidence and comfort that that's not something that they need to go and price differently, from a rate perspective. So, I think that's something that, just been, we're waiting, right? I think we're kind of all holding our breath and like seeing if there's ever going to be a trade. I think we have to wait a little bit longer here because COVID's obviously probably not going to be the great time for someone to go trade an asset, but eventually it'll happen. It'll happen.
For sure. No, that's awesome. And then on these new like the new buildings you guys are working on, whether it's ground up or retrofit, are you guys now putting in place? I know some big operators are doing this where it's like kind of COVID specific, like touchless access. If you guys didn't already have that, upgraded air filtration systems, temperature tests if guests are coming into the building. Like, are you guys implementing any of that for during COVID, post COVID?
Yeah. We're looking at what you should do in new developments. I think that, this is like, when there's a fire, everyone rushes to the water pail and tries to put out the fire as quick as possible. And then when the fire goes away, everyone forgets that you had one. And so I think that, what we've done from a technology side is try to make it a pretty seamless experience generally, even pre-COVID. We were already on the verge, and then I think we're just about to roll this out where you can unlock your door with your phone. You can basically interact with the entire building from your handset, from your cell phone. And, that's all done through our Ollie Living app. So I think that technology piece actually can be a big solution, for the COVID environment, and even a post-COVID environment. I think people generally want to have a seamless experience with their buildings, and so we've spent a lot of time on that in the technology side. We also have put in some pretty some pretty strict cleaning regimens in all of our buildings because of COVID. Temperature checks and ensuring that every person walking through the building is in compliance. Like, I am concerned from a fair housing perspective, like what that could eventually mean. Like, obviously you're trying to do it to protect everybody in the building, but it's always the person that you're not protecting, which is going to be, where you have an issue. And so we're looking at that. We're talking with council, trying to figure out what we should do and shouldn't be doing. Air filtration systems, absolutely. Touchless, keyless entry, absolutely. Making sure that the cleaning regimen is, on a strict, daily, if not 2 or 3 times a day in the elevator, in the common space. Absolutely. But, we want to make sure that we're also not impacting how people live in a post-COVID environment as well.
No, that makes sense. No, that's great. And I love that analogy about the putting out the fire and then it's like, oh, there was no fire.
No fire. Yeah.
So Gregg, let me ask you. So my final question that I ask everybody is, if we fast forward 10 years to the year 2030, in which we'll be here on no time at all, where do you see co-living as a sector globally?
Yeah. I do, I'll kind of leverage back to a little bit of our conversation earlier. I do foresee co-living being a unit type in institutional quality assets. I think that we'll have, no different than you have walk-up buildings, in Brooklyn or, in various other markets where, they're 3 and 4 story properties that people like that kind of environment. But in large assets, I think you're going to have various floors or various, units in floors that are, they're going to be eventually, I think, called serviced apartments, or, you kind of seen that word tossed out there. And I think that's going to be more of what the product looks like and feels like as people, become better at it. People become more aware of what the co-living concept is actually trying to, what audience the co-living concept is trying to, cater to. And so I think that's where we're going to be. You're going to have 20 to 30% of units in big assets that are service apartments. And then there's going to be a piece of those that are room-mated apartments, and the room-mated and service apartments are going to be called co-living. And so that's where I kind of really see this industry moving. And then you're still going to have, the health and wellness concepts. I think those are fantastic. And you're going to have artsy concepts, which I think are fantastic. I sit on a board of a not-for-profit called the Artist Co-op. And the whole idea there was, how do we get artists together in a low-cost environment that they can actually have access to the same services that other people don't have? And I think that is going to also kind of be something where people niche into various, demographics where people are looking for a solution. I think co-living has the ability to kind of go solve that very quickly. And whether that's in high-end residential or whether that's in, walk-up concepts, I think that co-living will be the recipe to kind of be the filler around the edge there.
That is awesome. I agree 110% with that for sure.
Good.
So Gregg, it's so cool having you on. We've been bringing on some return guests that were on the show, either a year or 2 ago. And it's so cool to hear everybody's progress. Like, everybody's just progressing along, even during the COVID era, which is definitely exciting to see. Thanks again for coming on this week.
Yeah, no, thank you. I appreciate you having me. I'm excited to be here and love to come back. So it's good.
Thank you so much for checking out today's episode. And if you're looking for more information on co-living, you can check out our published book, The Coliving Code, on Amazon. And be sure to go to Kindred to check out our online search and discovery platform for co-living around the world. Lastly, a quick thank you again to both of our sponsors. Anyplace makes it easy to book a flexible, furnished accommodation anywhere in the world, whether it's an apartment, co-living space, or extended stay hotel. And also ISL Furnishings. Trust your unit interiors to ISL. They bring light to your vision. And one last quick mention to make sure you register for the Monk Realty Summit 2020. Again, September 1st to September 3rd. Registration link is in the show notes.